Okay, so now that we've actually identified what type of property you're after, what your financial objectives are, the first thing that we're going to want to do is we're going to want to test that model. We're going to do that still in the office. We're going to do that by we've got a big screen television that we're going to put up properties on, look at neighborhoods, communities, and property searches that match the information that you've given us to see if that's really a fit as we start to look at those homes that are coming up in the community, what the price points are, and how those components fit together to see if those are matching up with what your expectations are. And we're going to have a second part of that, which is really to start to test what the mortgage world looks like or what the financials look like as a part of that process. Because as we start to look at those homes online and we start to narrow down where we think you might want to move, what type of property you're going to feel comfortable with, we want to also understand if the financial expectation is lining up with your goals as well. So we're not going to guess at this point. We're going to bring the mortgage professional into the mix, have a conversation with them, get a fees worksheet and a mortgage payment around the type of product that you're thinking of from a mortgage perspective to make sure that the mortgage numbers are lining up with the property expectation and the community expectation. So once we start to feel like we're comfortable, we've got those two pieces fit together, then we're in a position where we really can efficiently use time to go out and look at properties. Up until this point, it's been important to narrow the process down so that we have clarity around what the goals are and what the objectives are. If you look at a market like Metro Atlanta, there's over 20,000 homes. Even in a constrained inventory market, there are more than 20,000 homes in the market. So if you just start trying to search for homes or trying to drive around and look at homes based on 3-bedroom, 2-bath between $200,000 and $300,000, the number of homes is going to be overwhelming. It's going to be a bad use of everybody's time, especially the buyers, because they're not going to understand how far apart things are, what the differences are in different communities, how schools might be impacting the decision, etc. So what we want to do as we uncover all of those features that are important to a consumer is make the best use of the time that we have together and ensure the properties that we're looking at are really going to match the buyer's criteria, both in terms of what the home features are like, what the community features are like, and what the reality of that mortgage payment is going to look like. And at this point, we're also going to tee up the discussion of not just the monthly payment, but what is involved in pulling the financing together for a transaction. Okay, so as we start to look at financing, it's important to understand there are a variety of different mortgage products out there, and they vary not just in terms of down payment, but in terms of the term of the loan, in terms of the variability or fixed rate of the financing. And a number of those factors are going to come into play, especially as we look at your time horizon for the exit strategy, and we start to look at what your goals are from a financial perspective around the property when we are looking at these homes together. So we want to understand as we start to look at financing, all of the cash that's going to be required for closing, how comfortable those numbers are for you, and we're going to want to make sure that we know if we need to start to try to address certain factors around that to get you in the home that you want, that we know that as we start to look at properties and we look to structure deals from a purchase and sale agreement perspective to make sure that we're maximizing your financial potential in terms of your goals. So number one is there's more money that's required to close on a property than just the down payment. There are closing costs associated with the loan. There are attorney's fees or title company fees associated with the closing itself. There's title insurance typically involved in a transaction. There's homeowners insurance. There are prorated taxes and insurance, and there are potentially HOA or homeowners association or property association fees that come into play in a transaction. So all of these things together, in addition to creating escrow accounts for your mortgage, are all going to compound the amount of money that's required up front. And so a lot of people struggle with trying to make sure that they've got the amount that the down payment is set aside in order to feel like they're comfortable making a real estate transaction. And that's great, that's important, but there's really a lot more to it. And we want to understand if there's a constraint on that upfront money, there are a variety of different ways that we can work some of those pieces into the transaction as we look at the right properties for you and as we look at negotiating and structuring a deal to ensure that we're maximizing the ability to get you into the home that's going to serve you and into the financial investment that's going to reward you in the best way. As we look at that, we're going to bring in our lending partners, and we work with people that are highly qualified in the lending industry, just like we put ourselves through a rigorous process on the real estate side. We want to make sure that our lenders do the same, and that they have the right financial vehicles available to the buyer to make sure that they're going to get the best financial product, the best advice, and the best outcome in terms of a transaction for them. So at this point, we're going to really bring that lender in. We're going to ask them to do a fees worksheet. We're going to ask them to walk through their take on the financial situation. We may prod them for a couple of different questions based on information and feedback we've had from the buyer. And we want to make sure that there's clarity around what term the buyer is looking for in terms of finances, what a range of interest rates might be in today's market, what payment is going to be comfortable, because we can actually test properties as we come up against them to make sure that we're going to be within that model. We're going to make sure we have clarity around things like homeowner association, property association fees, taxes, and how all of that's going to play into the mix. And then we also want to make sure that as we understand down payment, that we also understand closing costs and prepaid items, escrow fulfillment, in order to make sure that the buyer has a clear understanding of all of the components that are going to come into play as a part of this transaction. And it's also important to mention that in addition to that down payment money, the money that's going to, or the down payment, closing costs, and prepaids, the additional funds that are going to be required during the process are going to be typically an appraisal, an inspection around the property, potentially a stucco inspection, also potentially a termite or pest inspection. All of those are going to be fees that are going to be paid prior to closing, along with any escrow funds attached to the deal itself. So typically when you make an offer, you're going to put down some earnest money, and then you're going to have inspection and appraisal kind of right after that. And those fees are going to be paid at the time that those transactions occur. So the time the offer is made, the time that the inspection is done, the time the appraisal is done. So in addition to the down payment and the money that's going to be required at the closing table, those are a couple of things that are going to happen earlier in the transaction, and it's important to understand that and to be prepared for that as a part of the process. So hopefully that gives you a little bit of insight into what's going to happen in terms of the financing around the deal and making sure we start to understand the financing components. But the most important thing is for you to be partnered with a real estate professional and a lending professional who are going to be able to ask the right questions to uncover the needs and the goals that you have, and to be able to present the right financial products and walk through and break down those pieces. There are way too many variables to do in a short video, but we wanted to give you a little bit of insight to be prepared for that process, and we look forward to working with you through it.